Hey guys, what's up? Alec back with the daily stock market, and look at that. Alibaba up 14% on the day alone. Absolutely killer day for Chinese stocks. Alibaba, Neo up 3%, not doing as well as something like Alibaba. We're going to talk about Alibaba, what's going on, why the stock is rallying. We're also going to dive into earnings a little bit, so make sure you stay throughout the entire video. But let's talk about Alibaba. Did anybody predict that the stock was going to be going up? And if you're in our Discord, then you know members, top traders like Rich Mo, for example, he predicted a call on Baba and was up 1,000%. But not only did top traders get in, he posted it in the chat for everyone to see, and hundreds of students made 500% gains plus, and members of our Discord. So if you want to join, make sure you message me here on Instagram and I'll send you over a link for the Discord. If we scroll up, we can see more success stories, of course. Other members up $1,000, 480%. Another one up 570, 490%. Another one up $1,900. And the list goes on and on of the success stories. So that was a sneak peek into the #1 Discord for stock market investors and option traders. Message me if you want to get on there. But let's dive into Alibaba and see what's going on. So as we scroll down, we can see a few things going on. We can see that it has a very high PE ratio, and a value investor would not touch this stock, by the way. Market cap of $262 billion. However, it could still be classified as a growth stock. So keep that in mind. And we can see that other analysts are calling this a template for Amazon and Alphabet or Google. So the question is, can we see Amazon do something like this or Google do something like this in the future, in the next few years? And if we keep reading through the article, the last paragraph there, you'll see Tuesday, the Chinese internet company unveiled a new organization structure. The company is arranging itself into 6 business units, each with independent board and directors and CEOs. The 6 include cloud intelligence, #1, internet retail, #2, mapping, #3, transactions, #4, logistics, #5, and digital media, which is #6. Each business group will also have the flexibility to raise outside capital and potentially to seek its own IPO, with the exception of one of their business groups, which will remain wholly owned by Alibaba Group, reads the news release. Investors love the idea that Alibaba is laying the groundwork for breakup. Alibaba was up 14%, so that's why it could be good to own stuff like Amazon and Google for the long term, because even if they decide to do something like this in the next 2 or 5 years, Amazon and Google, it's still going to be beneficial, and you'll end up owning all of these 6 different companies involved with Amazon, and not just Amazon. So there's going to be dividends along the way of owning great companies like Amazon and Apple and Google and Tesla, for example. Those are just a few to name. Tuesday's meteoric rise on Alibaba of 12% roughly translates to 30 billion in stock market value, or in market cap value. It was a shot in the arm the stock needed. Coming into Tuesday trading, Alibaba stock was down so far this year and off about 25% over the last 12 months. Shares were trading at about 10 times their per share earnings expected for the calendar year, while over the past few years, the stock has been trading for about 20 times the profit expected for the coming year. So traditionally speaking, it is on sale of around 50% based off of the prices in the past where Alibaba has been trading. And if we look at the 5-year stock price on Alibaba, it solidifies what we just talked about, that the stock is trading at a discount. Okay, in 2020, we saw the stock as high as $300 per share. Okay, now it might have been a little bit overvalued at that price point, but even in 2019, 2018 lows, we did see Alibaba trading at $132 per share. So, in my opinion, $135 to $165 per share could be a fair value on Alibaba, all the way up to $200 per share, especially if we continue to see the stock rally from the stock split. Now, it's not really a stock split, but we'll refer to it as a stock split because the company is splitting into 6 different businesses. Now, if we keep reading through this article, we'll go on to read that Amazon stock could use a similar shot in the arm. Shares are up around 16% so far this year, but they're down 42% from this time in 2022. Shares are trading for about 56 times the estimated earnings of 2023, compared to with an average of about 70 times forward earnings over the past few years. So it's about a 20% discount traditionally that Amazon is trading at right now. Amazon's business looks a lot like Alibaba's, and vice versa. There's Amazon Web Services, a dominant provider of cloud computing services, as well as movie studios, Amazon Prime, logistics assets, internet retail, which is obviously Amazon, internet advertising, and third-party retail services as well. Alibaba gives a boost and a positive signal to other big tech companies that they can also explore and consider a breakup of their segments to create more value for their company and their investors. Overall, I think this is a good move on Alibaba, and I think that also Amazon will follow suit. It might take them a while to come to conclusion that this is the best thing to do, but as more companies follow Alibaba's suit, I'm sure Amazon will fall right in line because they own so many different segments of business that it would make so much sense for Amazon to do something very similar to this, and the stock could easily rally above $135 per share, which would give you over a 35% swing trade if you bought at current levels. However, I think the best place to be buying Amazon's closer to $85 per share. I think it will revisit those lows once again. So personally, I have price alerts set at $85 per share, $86 per share. However, for my long-term accounts, I am dollar cost averaging in for Amazon for the long term. And just a quick update on earnings calendar. We just had Lululemon, Micron, and Dave & Buster's all report today after the close. Tomorrow, before open, we have Paychex reporting. After the close, we have not much going on. Before the open on Thursday, not much going on. After the close on Thursday, we have another big day coming. We have skills reporting, Canoe, and EVgo. So if you're not on the close friends list yet, make sure you get on because we're going to be doing trades on all 3 of those stocks Thursday after the close. Now, Lululemon stock did shoot up 12% after hours. Massive stock, massive moves after hours. On our Discord, we also voted. We have polls every day for earnings to see what people are taking calls and puts out on. And majority of people voted for calls on Lululemon. So congratulations to everybody in the group that took out calls on Lululemon. Over 12% gain after hours. Okay, here we can see that Lululemon's quarter results beat Wall Street estimates, sending shares higher. The athletic wear company also beat estimates on fiscal year 2023 revenue and full year profit. Lululemon also issued an upbeat guidance for the new fiscal year. So they also had bullish momentum on their guidance, which we consider a triple beat, EPS beat, revenue beat, and a guidance beat as well. Micron did report earnings. They're down around 1% after hours. They've been pretty volatile, up as high as 3% after hours, and then going down around 1.8%. And Micron's earnings did not go well at all, to say the least. Micron sales plunged 53%. They missed on their EPS, and they're also cutting 15% of their staff. Better days lie in the future. Okay, for the quarter, Micron reported revenue of $3.69 billion, about in line with the Wall Street consensus of $3.7 billion. Revenue was down 53% from a year ago and 10% from the fiscal year first quarter. On the EPS, the company lost $1.91 in the quarter, worse than both the company's forecast for a loss of 62 cents per share, and Wall Street's forecast of a loss of 86 cents per share. So it was massively off of those expectations, which is why we're starting to see Micron fall in the after hours. So if you guys need more help knowing whether a stock's going to be moving down or moving up, go ahead and message me on Instagram, because that's exactly what our community strives for, helping. And we are so big on community that all the top traders in there are giving all of their input every single day, so you can know and be ahead of it. That's why you even see the newest members in the group even making money in the group. Here you can see Brian saying, I'm new to the group, guys. Thank you for this call. Up $700. Okay, this group pays for itself very, very easily. Up 375%. And here you can see all of the other positive comments coming in as well. So if that sounds like something you're interested in and you want to start your story of success in the stock market now, reach out to me on Instagram. I have a few more spots left for my coaching program as well. Okay, click on success number 8 if you want to see some more positive testimonials from other students. Thank you guys for all the love and support you have been showing on all of these videos. Remember, the only place to find the full-length videos is here on YouTube. Share this video with a friend if you think that they will find value in it. As long as you keep liking these videos and giving that thumbs up, hit that like button, I'll keep making these videos for you guys. Thank you for all the love and support, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.